IT stocks plunge after analysts reset the expectations following Infosys Q4 disappointment. Even capital goods lose ground, but FMCG and utilities buck the trend.
Infosys shocks investors by missing its own growth guidance for the first time in 6 years. Concerns over deal cancellations and ramp downs across key sectors drags the stock and its peers lower.
HDFC Bank slips as the near-term impacts of branch expansion and liability mobilization rein in profitability, but asset quality improves and margins remain stable.
TV18 gains after Viacom 18 closes the deal with Bodhi Tree Systems and Geo Cinema, while a sale of 5.7% equity by Oppenheimer and Z Entertainment weighs on the stock.
Hello and welcome to Business Lunch. I'm Nisha Poddar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, afternoon after a long weekend, today the markets are on the weakish trend, and a lot has to do with the IT pack and the kind of projection that the market is really getting from some of the big tech companies. So tech, a big spot of bother. A lot of those heavyweights from tech is dragging down Nifty 50 with over 150 points cut at the moment. Nifty 50 is trending at 17,669 odd levels. But what's in the green is Bank Nifty, marginally in the green at the moment, but still much more positive than what the Nifty 50 stocks or the Nifty 50 as an index is showing. Mid-cap index again on the flat line with a green bias at the moment. Advanced decline ratio in favor of the declines at the moment. So really, if we look at some of the big counters, Infosys is one of the top losers in trade and dragging down the entire IT pack. But what's really doing well is big boy Reliance Industries adding a lot of might to the overall market that ways, and FMCG counters, the consumer discretionaries like Nestle, Britannia, ITC, HUL, all of them also putting their weight behind and doing well in trade today, Pavitra.
Oh, absolutely. And from the FMCG pack, like you mentioned, ITC is above 400 now. So that one has seen that move just continue higher. What's encouraging is that the mid-cap and small-cap end of things is holding up, which is why you're seeing the advanced decline pretty much neck to neck. So much of the pain coming through from the IT pack. But if we can go through some of the smaller IT names, you'll see that the cuts are even wider there. So something like a Coforge, L&T Tech, there you have it on your screen. Cuts of around 5% on all of these, Persistent down another 5%. The banks have moved higher in the past, hour or so. It was looking quite bad for the banks as well for a while. And this is in spite of the fact that HDFC Bank, which is such a big weight, is seeing pretty sharp cuts right now. So that's what's really going on in terms of the market action. We will come back to this. But first up, let's kickstart the show by talking about the top story, which of course is Infosys. And, like we've been telling you, the entire pack of IT stocks is under massive pressure after Infy reported a dismal set of Q4 earnings. So Rima standing by with a quick roundup of all of the numbers and some details on what the management really had to tell us.
Thanks so much for that. It's a very disappointing quarter from Infosys, as we've been pointing out. A constant currency revenue decline of 3.2%, margin contraction of 50 basis points. I think the extent of miss has come in as a big surprise because markets were penciling in a weak set of earnings after TCS. But as I said, the quantum of miss has taken the street by surprise. FY24 guidance is muted. Constant currency revenue growth of 4 to 7%. Margin range has been brought lower to 20 to 22%. The reason also why we've seen such a sharp knock in the stock is because Infy has a higher weightage compared to peers. In their Nifty, its weightage is 6.75%, while that of TCS is 4.33%, and also is a big overweight in most of the portfolios, whether it's on the domestic mutual fund side or for the FPIs. So if any of the institutions want to bring down their holding in Infosys because it's so widely owned, you would see that big knock. Separately, if I want to compare Infy and TCS, for TCS, the problem was centered more around BFSI in North America, and they didn't see any project cancellations. In the case of Infy, it appeared to be that it was more widespread across verticals and not just project deferrals or projects being paused, they also saw some project cancellation. Across the board, we've seen earnings being downgraded by 7 to 10%. Ratings have been slashed lower by CLSA, Nomura, JP Morgan, Citi. Separately on Tech Mahindra, Citi has downgraded the stock to a new sell, and the key reason is that the communications vertical could be under pressure because both TCS and Infy has clocked in a weak performance in the telecom vertical, and this vertical contributes about 40% to Tech Mahindra's overall revenues.
All right, thanks so much, Rima, for giving us all the analysis on the Infosys numbers and its impact on the entire IT trend that we are seeing. In fact, let's also hear out what the CEO of Infosys, Salil Parekh, had to say about the missed guidance, the new guidance, and the visibility on the deal wins going forward.
For the quarter Q4, what we saw is during the quarter, there were some clients where we saw ramp downs, and then there were some areas where we saw one-time situations. The bulk of the impact in the quarter was from the ramp downs that we saw during the quarter. There are two aspects to it. So one, on the ramp downs, there have been with some clients in the telco sector, in the high-tech sector, in retail, and in financial services, in mortgages, asset management and investment banking. So those ramp downs, we saw some stabilization in March, but the demand environment is uncertain. The way we've constructed the guidance is based on what is the large deal and overall wins we've had in the year and also in the quarter. And then a lot of our work, which is multi-year work, that carries through. So based on that, we've also expanded. Instead of a 2-point guidance, which we normally give, we've done for a 3-point guidance, more with a view that the environment is uncertain given what we saw in Q4. There, as we've said in the past with large deals, the timing is not like a predictable thing when they come in a year or it's going to come every quarter or something. But over 1 or 2 or 3 year periods, you see this thing shows more stability. There is slowing in decision making for large deals. So the time, let's say discussion or deal is in a pipeline becomes a little bit longer. Has been, we've seen the data. But when the decision is made, it starts right away, and that translates.
All right, that is the Infosys management. But we also had another big number that came through over the weekend. That's from HDFC Bank. Not been spoken about too much because of what's going on with IT. But HDFC Bank is also under pressure. And this after the bank reported its fourth quarter numbers, which were pretty good, actually, largely in line. Abhishek is here with the highlights. Abhishek.
Well, the bank is building on for future traction, so the cost is being incurred right now. However, asset quality and the quality of the portfolio remains impeccable. So what has worked in this quarter is that despite rising cost of funds, the net interest margin has remained stable, and NII growth on a YOY basis is pretty strong at 23-24%. The slippage ratio of 1.2% is perhaps the lowest in last 6 quarters and second lowest in last 31 quarters. So that helps the asset quality remaining stable, with gross NPA ratio being the lowest in last 9 quarters. ROA remains robust, that is return on asset. It remains at 2.1%, with PCR or provision coverage ratio being the best in last 9 quarters, above 75%. So RWA to advances ratio is at the lowest in 4 quarters and the second lowest in 17 quarters or more, which suggests that the book is being built in a secured manner with lower risk. Restructured book at mere 0.3% is the lowest in last 10 quarters, and HDB Financial has reported strong numbers. The PAT is the highest quarterly PAT that they have seen, with asset quality being the best in last 9 quarters. What has not worked in the result is the operating efficiency, given the fact that OPEX remains elevated due to the branch expansion that they have taken. So the cost to income ratio is at 42%, perhaps the highest that you are seeing in last 25 quarters. And CASA growth rate, or the low cost deposit growth rate, is the lowest in last 3 quarters. For third quarter in a row, you are seeing CASA growth being below the overall deposit growth. This is a trend seen across industry peers as well. Corporate loan growth YOY is below the overall loan growth, and in terms of PNL, NII and PAT is below our poll. Back to you.
All right, Abhishek, thanks so much for getting us all those important details. And of course, the earnings are having an impact on the market. But what's also to really impact the economy and therefore the market sentiment is the monsoon season. And we caught up with Hemant Sikka, the president of farm equipment segment at Mahindra & Mahindra, who spoke about how the IMD forecast of near normal monsoon will augur well for the industry. Listen in.
We are very happy that IMD has come up with this forecast of near normal monsoon. Normal monsoon they characterize as the 50-year average of the monsoon happened in the last 50 years, which is about 87 centimeters. So it is expected that the monsoon will be between 96 to 104% of this 87 centimeters. So even if it is on the lower side at 96, it is termed as normal monsoon. So I think it's good going forward, and we are happy that if monsoon is normal, that would augur well for the industry. FY23 was a record-setting year for the tractor industry. The industry cumulatively clocked 9,45,000 units for the domestic market. Exports is over and above this. So it was a record-beating year for the industry. Industry grew 12% over FY22. So industry is right now sitting on a very, very good base. Now, El Nino is a weather phenomena, and at some point in time, it does come back. For example, in the last 25 years, we have had 5 cases of El Nino. So it has to come back at some point in time. That's how the weather pattern plays. Right now, the strength of the industry, the strong footing that the industry is currently on, and the various factors which I can talk about, are giving us confidence that if El Nino had to happen, actually this is the best time for El Nino to happen. First of all, there is weak correlation with tractor industry growth, plus the industry is very, very strong. The farmer has very good cash flow.
All right, that is the management of M&M sounding quite positive, also saying that there isn't too much of a correlation really between what we're seeing with, the El Nino as well as the tractor industry. But with that, we are going to get into a short break now. On the other side, there is a new launch by Lamborghini for the Indian market, so stay tuned. We'll get you a word from the management when we come back. Welcome back. You're still tuned into Business Lunch, and now for all of the auto enthusiasts that are watching, performance car maker Lamborghini has launched the 2023 Urus in India with prices starting at 4.18 crore rupees. Now the new super sports utility vehicle replaces the standard Urus which was previously available in India, and my colleague Yash caught up with Sharad Agarwal, who's India head of Lamborghini, on the sidelines of the launch, and began by asking him about the entire super luxury segment in India. So take a look.
We are now at a right juncture where we are seeing that overall there is a very positive momentum on all the variables which will drive the super luxury segment. So I anticipate that the segment should continue to grow consistently this year, because India has an incredible and a huge opportunity to grow for coming years. And yes, at Lamborghini we have been always focusing on the Indian market, focusing on our internal variables to drive our consistent growth, to focus on the customer experiences, customer journey, and we will continue to do that. And I'm sure when the segment is growing, we are going to also grow with the segment.
Absolutely. I'll take a cue from what you mentioned. 500 units is what you said. That's for the super luxury or ultra luxury automobile market. What has it been like for Lamborghini in this 500 as far as the pie is concerned? And I won't talk about a couple of years, but let's take a little longer view, about 5 years. What is the consistent number that you see?
Last year, like you said, the segment crossed 500 cars. We delivered 92 cars in the Indian market, another record year for us. We grew by 33%. And apart from these numbers, also it was a very exciting year because we curated some very unique experiences for our customer, because that has been our primary focus in the market. We launched 4 new models in the market. We curated Lamborghini Day, celebrated the milestone of 400 Lamborghinis in India, achieved the milestone of 200 Urus in the country, and also curated some unique drive experiences for our customers. Now, looking into the future, slightly 3 to 5 year horizon if you look at, so like I said, that the size of the market or the segment in super luxury truly does not reflect the potential what we have. So from here we anticipate the segment should grow consistently.
Correct.
In my anticipation, if the segment doubles in next 3 to 5 years time from this 500 to 1000 cars is possible, because that's the kind of opportunity India brings.
There is so much buzz about electric mobility, especially in India, looking at the size of the market. What is your plan as far as Lamborghini's first electric car is concerned? By when do you see that coming? And then how do you scale that up from that point?
So we announced our roadmap towards electrification in 2021, and as a first step, we are moving towards hybridization.
Okay.
So this year in March, to the 29th of March, we launched the first hybrid model V12,
correct,
Lamborghini Revuelto for our customers, and in 2024 we are going to launch the hybrid for Urus, and then for the third model, which is Huracan, today we are going to replace it with a completely new model by the end of 2024. So we are going to hybridize as our entire model range as a first step.
Correct.
And then in 2028 we are going to launch the first fully electric Lamborghini, which is going to be the fourth model.
Okay.
And what we are looking at is that we want to reduce the CO2 emission from our cars by 50% by 2025 and 80% by 2028. And we are also making the biggest investment in our history. We are investing 1.8 billion euros towards this sustainable future.
All right, those were Lamborghini's plans for India. Let's now shift focus to the COVID situation in the country. And as per the Union Health Ministry, over 9,100 cases were reported on Sunday, while the positivity rate is at 8.4% now. And it's also important to mention that over 6,300 recoveries were reported, and the national capital in the meanwhile also recorded over 1,600 cases, while the COVID positivity rate hovers around a staggering 30%. And Maharashtra, on the other hand, registered 650 cases, of which 82 were reported from the capital city of Mumbai. So COVID cases definitely on a rise, and we suggest everybody just stay safe. Pavitra.
All right, that is the latest on the COVID numbers. But some more important national updates that we're tracking. The Deputy Prime Minister of Russia has said that Moscow is discussing a free trade agreement with India. Remember, the Russian Deputy Prime Minister, who is also the country's Trade and Industry Minister, is on a 2-day visit to India. And in the same event hosted by industry body FICCI, External Affairs Minister S. Jaishankar said the discussion on Russian payment issues are underway, while India will be looking to expand cooperation further with Russia.
All right, on that note, we'll slip into a short breather on Business Lunch for now. But when we return, we'll get you a sneak peek of the Apple retail stores coming to Mumbai and Delhi. Stay tuned for that. Welcome back. You're watching Business Lunch. Now, Apple's India sales are set for a boost as it opens its first local store tomorrow right here in the city of Mumbai. And 2 days later, it plans to open an outlet in New Delhi. Now, the iPhone maker CEO Tim Cook is here in the country to open the first local stores. And first, let's take it straight across to CNBC-TV18's Shivani Gharat for a sneak peek of the Mumbai store.
Apple is opening its first retail store in India, Apple BKC, which is a 22,000 square feet store approximately. It's big. I'm inside the store. We are here at the preview of this particular store ahead of the launch date. And it has beautiful glass facades right here, which extend to a nicely done wooden ceiling. Let me just take you inside to see what all is there inside the store. So, of course, as soon as you enter, you will encounter these tables where Apple products are placed, whether it is the Apple iPhone 14 or 14 Pro Max, very much like any other store which is there globally, where you come and experience, the customers come and experience the product. Another highlight of the Apple store, the Apple retail store, is that you can purchase the product online and come and pick it up here at the store. Now, the store is full of experts. Approximately 100 of them will be here who speak 20 different languages, who will help you, of course, make a choice, make a decision basis what you want, what is the purchase that you want to make. Also, they speak 20 different languages, and let me tell you, 50% of them are women. Whether it is, your after-sales service, whether you are having an issue, whether you want to replace a product, all of this will be addressed by them. Now, another part or another highlight of this store launch is that Apple is launching their Mumbai Rising initiative, where they are inviting creators, experts for you to come and experience the products right here at the store, where they'll be conducting sessions, and you will get tips on how these creators or experts use their products. It is a part of the Today at Apple initiative, which the company had launched in 2017. So this is the new Apple store, Apple BKC store in Mumbai. And this week, interestingly, also marks 25 years of Apple in the country.
All right. Thanks a lot for that, Shivani. It looks stunning, and I can't wait to go see it for myself, and I'm sure that'll be exciting. But let's also take it over to Delhi now, where Apple Store will open on the 20th of April and is inspired by the many gates of Delhi. The store is located in Saket Select City Water Mall. So we have Shivani, who's gone over there to check it out. Shivani, how's it looking?
We are standing in front of Delhi's first ever flagship Apple store that will open its gates for customers on April 20th from 10 a.m. onwards here in Select City Walk, Saket. At the moment, the only teaser here is the barricading right behind me, which is based on Delhi's many cultural gates that signifies Delhi's rich cultural heritage. The barricading also has a QR code on it, which can be scanned to get information about the upcoming store and also to download the Apple's Delhi wallpaper. Specially curated playlist based on Sound of Delhi can also be accessed on Apple Music through this QR code. Apple has earlier said that Apple BKC and Apple Saket flagship stores are pivotal to turbocharge Apple's future growth in strategic markets like India. In Saket's Select City Walk Mall, the Imagine store was Apple's premium reseller, but the store has been shut down days before Apple's flagship store's opening here. The new Apple store in Saket is likely to be an experience center and a major attraction for tech enthusiasts.
All right, thanks for that. So both our colleagues really giving us the on-ground experience of how the stores are going to look like. So that's what we are waiting for. And Tim Cook also, and how he really pronounces his India strategy. With that, it's a wrap from the entire team of Business Lunch. But stay tuned for Midcap Radar. Thanks so much.